What's up, traders? Matt from the Trade Brigade here with your weekend crypto report, where, as always, I do a technical analysis and give you my thoughts on the coins listed up above. Nothing has really changed with our watch list. However, what you'll notice is that nothing is escaping the red here into the weekend, and that's coinciding with a US stock market that was down significantly over the course of the week as well. So crypto is no safe haven. It's certainly not proving to be any sort of hedge to inflation. So with that out of the way, let's kick things off on our Bitcoin daily time frame chart here and just talk about the major areas on all of these coins, really, where there's potential for a turnaround, if there's any nice patterns unfolding, and what we can look for going forward here. I mean, the dominant thing in play is all of these recent downtrends here. In Bitcoin, the pattern we have is certainly this head and shoulders, right? Something that looks like this. Your neckline is kind of in this area. You could have even drawn it in like this. Regardless of how you slice it, we are underneath the neckline, indicating a significant breakdown here. So there are some ways that we can measure the move in Bitcoin in terms of where this could potentially go. And typically what we look for is the distance from the head to the neckline. Now we're just going to use this horizontal area as the neckline. And what we'll do is just take that box and instead drag it lower and stack it right on where the neckline was. Now I'm not saying that Bitcoin has to get all the way down to here around roughly 14,000 over the course of the weekend or even ever. But from a measured move perspective, that's kind of what we're looking at here, which is incredibly bearish, right? So it's not really fantastic to see Bitcoin breaking down out of this bearish pattern, knowing that there's some room to fall. I do think that there are some significant areas of support before we get there. Obviously, this 30K area right around in here is extremely important, and I do think it's a likely target given the fact that we are technically underneath now the top end of block number 1 and the bottom end of block number 2. Remember, we talked about the big importance of this 41K roughly, certainly broke down underneath that firmly, like spending some significant time there underneath it on today's session. So that strikes me as being a bearish indication. We're at the higher low pullback from right around in here, but we're coming into it on an increase in selling volume and a big bodied red candle here, indicating a lot of downward momentum. I wouldn't really be looking for a dead cat bounce just yet. What you would want to see are some sideways consolidation dojis, some accumulation from the buyers, and then maybe it gets a little bit of a bounce point here, but I'm not seeing that just yet. So be patient and wait for that setup to really present itself before you hop on the long side here inside of Bitcoin. The last place we dollar cost average, or at least I dollar cost averaged into the coin, was up here on 41K, and the next place I'll do it again is down at 30K. I still do believe in crypto in the long term, and we just have to understand that it's a really volatile asset class, right? So be prepared for these major ups and downs, and you're either in for the long haul or you're kind of just sitting on the sidelines for now until a new bull market emerges. So that's what I'm seeing here. The main levels to watch out for: 31 to 30-ish thousand on the breakdown of 37,852. To the upside, the only way that this new bull trend may potentially be kicked off is if we get a bounce into the resistance trend line, but it has to break, and then we have to recapture 41,000. If that doesn't happen, if we can't get above that level, there's nothing bullish to be done here inside of Bitcoin. Next up, we have Ethereum, and we'll just zoom this one out a little bit. This one's not as pretty in terms of pattern. You can certainly see here would have been left-hand shoulder. Here's potentially a head. We don't have really a right shoulder. Now, there's potential for it to build out something like that, but that's extremely speculative. I wouldn't really put my money on that. Instead, what I would start thinking about is just the fact that the support trend line, if we were to draw in something that looks like this, is certainly well violated, right? We clearly have now a lower high and lower lows, cementing ourselves in this short-term downtrend. The major support to watch out for is at 2686, 2687 if you want to round up. Right here, it's either going to produce a dead cat bounce or it's not, and it's going to move lower into 2310. And again, do you want to take a stab here? It all depends on your own risk tolerance. If you're someone who's looking to trade this aggressively, then I would say, yeah, it makes sense to take a little bit of a stab here looking for the dead cat bounce. I would probably only push your luck into this area, 3,000 even, the back test of that breakdown point, and then I would take profit. Like I would take aggressive profit, maybe 3/4 of the position off there, monitor for continuation on the other quarter if it bounces in the first place. And in this instance, your stop loss would go right under here, right? So the risk reward makes sense if you're a short-term aggressive trader, but nothing about the chart structure would indicate that we're likely going to see a bounce just yet. So from that perspective, again, you may be jumping the gun before we have any signs of a reversal pattern off of this roughly 2,700-ish area. Again, to the downside, the prior neckline of this double bottom in here is around 2310. That's the next area of interest if it wants to come down and give us some sort of pattern, double bottom, all the usual suspects, inverted head and shoulders, whatever, for a break back higher. That's the next area of interest there. Again, nothing really bullish happens inside of Ethereum until we recapture 3,000 and start spending more significant time above that level. Next up, we have Binance Coin. This one's firmly breaking breaking down now outside of the support trend line that's been in effect ever since, what was that? May of last year. There we go. Had a loss for my months there. So regardless, bearish, right? No ifs, ands, or buts about it. You could also come in with sort of a secondary resistance trend line like this. Anchors up here, touch number 1, touch number 2 for a continuous lower highs, nowhere near the primary resistance trend line up there. Again, breaking the primary support. So we're going to go ahead and remove that. And now what we're watching for is just a breakdown over the weekend of this equal low, especially off of a lower high, to continue into the shoulder mark of this prior inverted head and shoulders. That's around 380. Anything under that, our floor here needs to be kind of at this level, 335. If that starts going, kind of gets more ugly. And again, even this move here is fairly ugly, but this is just about the same distance, right, to that next double bottom from in there. So let's map that out together just so we have it on the chart. That's around 259.10. Again, I'm not saying any of these levels will be hit over the weekend. I just want to know where support is if these breakdowns do become more aggressive over the coming month or months, plural, right? So that's what I'm seeing here. The only bullish trade is if we can break the resistance trend line and probably in this one, honestly, get back above this level here around 503, 500 psychological, right? This could turn into a double bottom. Doesn't look likely based on the candle structure, but again, I'm just talking in terms of bullish scenarios, has to be up and over that neckline and the secondary resistance trend line for potentially a move up into these highs around 573. Maybe, right? Very, very speculative. The downtrend is firmly cemented here with these lower highs and what will likely be a lower low after this video comes out. Next up, we have Cardano. This one actually produced a fairly significant bounce off of this 120-ish area. Remember, for a long, long time, we've been talking about that one whole dollar. Does look like it could be in play. This was nothing more than a fake breakout. Never really got us up and over that hump here around 162. Big rejection off of that same exact area. To me, I'm just going to start treating this as a channel. Whenever we have a channel in place, especially when it's a sideways channel, really easy rules to follow, right? Opportunity always exists at the bottom of the range or up at the top of the range, never in the midpoint. Try to stay away from this. At the bottom, you either get mean reversion or a breakdown. In the case of the breakdown, we talked all about one. In the case of mean reversion, your stop loss goes just under the lows of where it turns, targets the midpoint and then the top end of the range here, which is going to coincide beautifully with that resistance trend line. And again, the top is simply at 162. So those are the options here to sort of employ inside of Cardano. If you're bullish on the crypto space, then yeah, maybe it's worth taking a stab down here. However, it wouldn't be my first choice personally, noting that we've already seen that rotation once. For it to happen again in short proximity of time here, I'm not really seeing it as a likely scenario. So kind of be patient here would be what I would do inside of Cardano. I'm personally not making any moves until we at least hit $1 even, if not lower. Next up, we have Solana. This one's kind of concerning, falling underneath a big area of support. Let me put that on auto so you can see here. So this was your shelf, right around in here, around 129, breaking down firmly underneath that on today's session. So to me, it opens the door, it has opened the door already, all the way down to the prior top end of this flag around 82.95, call it 83 even. That's a long ways to fall. Again, there's really no reason to be speculating about longs in here until it wants to present us with a pattern. In terms of what that pattern may be, I don't know for certain, but if it wants to give us some sort of double bottom with a higher low, fantastic. Break of that neckline takes you back higher. All the usual suspects in terms of patterns, as we've been saying for a while now. If no pattern emerges and it just wants to go sideways here or do something like this, it's got to be a break back up and over 129.21 because it was such a pivotal breakdown point, right? If we can get back over, I do think that there's a good chance we come back in for a retest of this level right here around 151. But as of right now, patience, the candle structure wouldn't really suggest any sort of sharp turnaround. Next up, we have Linkcoin, which we did cover in last week's video. We said it was actually exhibiting relative strength. Well, not so much anymore. It's kind of on par with everything else we've discussed. Certainly, we did get that higher high above this one, but now we've retraced nearly 100% of that move. That's obviously a bearish indication. I would start watching out for a bounce in this one because we have that 100% retracement phenomenon here, close to around 18. Let me just throw that on as a horizontal area from all of this cluster of lows in here. So in Link, I might actually be looking at this one for a dead cat bounce before some of our other coins, noting once again that 100% retracement phenomenon. It's very rare that you just blast right through on the first attempt to those lows after that retracement. Usually you get some sort of lower high, reattempt for an H pattern, and then it breaks down after the equal low, right? So to me, that may be something worth paying attention to here. If we start to see any signs of an uptick here inside of Link, maybe it's a long looking for the rotation to some unknown area. We don't know where that lower high will be. It would be a great thing if it wanted to respect the technicals and go to 2380, but I wouldn't really foreshadow that. It's probably going to be somewhere random in between this range if it happens in the first place, and your stop loss is going to go under here on the entry or wherever the turnaround turnaround candle is. Let's say it prints a hammer with a little bit of a lower wick. Obviously, your stop goes under there, and you're looking for that turnaround with the stop. And then you adjust to break even as soon as possible to sort of mitigate your downside risk, especially noting that the crypto space is kind of taking a beating right now. You don't want to be on the wrong side of that for too long. So that's what I'm seeing in Chainlink. Does look like an attractive opportunity for maybe some sort of dead cat bounce. Next up, we have Ripple. This one not looking attractive for anything really. Oops, I don't know why that keeps happening. Fairly annoying. Apologies. Anyways, we're coming into this horizontal area of support around 59 cents, lower high, like a significant lower high. The dead cat bounce on this one was hardly anything, back testing that support trend line as well. We know that was a fairly bearish indication from last week. This is a long-term symmetrical triangle, right? So the energy, the compression from in here, finally starting to break down. I mean, it wouldn't be unreasonable to start thinking about this moving towards 50 cents and then some of these lower levels, notably that one right there. Over the earlier part of 2022, we have 37 cents. I mean, really, on something this cheap, that's not a percentage move that you want to be involved in if you're trying to fish for long. So I would really start to reevaluate any positions you may have inside of Ripple here as we're firmly sort of cementing the fact that we're breaking down outside of that symmetrical triangle. So not looking fantastic inside of Ripple, and it also doesn't look like there's any good structure to be buying against as of right now. Next up, we have Polkadot. And this one is certainly respecting the short-term downtrend line right here, breaking underneath the flush point. The next area of support is coming from this floor in here. There's really not a ton of structure right there, but a little bit of congestion. So I would watch out for 19 even, and if that goes, look out below. That's where the range really opens up again to the downside at 1278. Again, noting that we're falling out of this descending triangle here. We've been compressing in it for quite some time. I don't really see this as being a likely candidate to catch a dead cat bounce right out of the gates, right? All of these people are now overhead supply. As we start breaking down under the lows, the chain reaction begins, and we should be working our way lower here inside of Polkadot. So not really seeing a buying opportunity here until we come into, geez, there it is again. Apologies for that. Until we come into that level around 1278. Wouldn't really touch it. The only thing that would be semi-bullish is a recapture of the breakdown point and a break of the resistance trend line. But even then, I wouldn't really feel comfortable trading it in this box. The only thing that you could kind of do is start to classify this as a look below and fail. Target may be the top end of the range, but because the downtrend is so significant here, again, it wouldn't be my first choice for looking for long opportunities. Probably the most attractive thing we've seen so far is that Link 100% retracement. And again, even still, it's a very risky trade. Next up, we have Crypto.com coin. This one, following the pack, just moving lower. What'll be interesting in this one is kind of getting back to that ICO initial coin offering price, which is close to 25 cents, right? So if we do something like this, there you go. There's your 25-cent mark. Again, we're still far away from it. I'm not saying it's going to happen this weekend, but what happens at that level, right? That's where a lot of players got involved. You can see the volume surge as we were making that push higher. As we start really cementing ourselves underneath all of these levels, I imagine that a lot of these people are now overhead supply with the stock market crashing as well. It's just not a good look for many people's portfolios. Maybe some of these people start to panic out as we move under these levels. So Crypto.com coins probably, put it on ice for now. Be patient given the fact that we're coming into this lack of structure. If we start making new all-time lows, there's no saying how low it could potentially go. I do want to just reiterate though that over the long term, because this is a U for utility coin, it's going to stay on the watch list because if activity in this starts perking up, it could foreshadow more activity in the crypto marketplace as a whole, especially in smaller projects, which could be a bullish sign overall for the market. So it's something we're going to continue to watch here. And I do think over the course of time, it has the potential to turn into something like a Binance coin. But again, we're just not in the correct market environment for that to be happening right now. Next up, we have Matic. And this one was a relative strength coin as well, certainly exhibiting nothing different than Bitcoin, right? You do technically have the head and shoulders pattern. Here's your neckline. We're now underneath it, but we're at the primary support trend line, which hasn't really been tested in quite some time. Notice that we have anchor, touch 1, 2, and then we started getting touches above it, right? So to me, kind of interesting that we're actually touching the level as of right now. We'll see if this one produces a bounce. I might argue that this is kind of on par with the Link setup there, where this may be an attractive opportunity just because of the fact that we haven't tested the support trend line in quite some time. Now, don't get me wrong, we are coming off of a lower high from here to here, so traditionally this isn't a buy, but if this were to turn around here, if the rest of the crypto market were to perk back up, Matic would definitely be something that I look at first in terms of relative strength and just the fact that we're at support, right? If it continues to break down, what's the target underneath? Definitely these equal lows around 152, 150, the round number there. That's what I would watch out for next. And again, it would probably require a pattern, double bottom with a higher low, break of the neckline, neckline, could be some sort of inverted head and shoulders with a fake breakdown, just some sort of pattern off of that support if it's going to turn around anytime soon. Next and lastly, we have Luna, which of course is Terra, and this one was also a relative strength monster, but not so much anymore. We can go ahead and remove that secondary support trendline, and what you'll notice is that just like everything else, here's your head and shoulders. This one kind of, well, I guess it is breaking the neckline of the head and shoulders, but we're kind of at the equal low point. So here's your H pattern, again, off of a lower high. It would be likely to me that we do set a new lower low, and we're trying to do that as I'm speaking. The main area to watch out for is this super support around the horizontal level from this prior resistance, this prior pullback, and then we have this support trend line, the dominant support trend line, which is really, really old, coming from July, right? July, sort of touch 1-ish, 2-ish in here. We haven't tested that in quite some time. That's the dominant trend that's in effect. So maybe that's an area where, again, just like inside of Matic, if we were to come down inside there, that's where you start to be interested in, risk-friendly long entries with stops just underneath, looking for a rotation back to retest the neckline and the breakdown point, the equal low that we have right now, closer to 66. So that's going to wrap up our crypto marketplace. I know it's not really that exciting to cover when the market's so red, but, start thinking about potential opportunities. If there's any turnaround, you want to be on the ball when it does start to turn, so you can get in, you don't want to be the first one in the door, but you do certainly want to get on a little bit earlier before it hits peak euphoria and you're back to being the one who buys Bitcoin at the all-time highs, right? So that's all I've got for you today. If you enjoyed the analysis or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our secondary channel is linked down below in the description, where we do 10 to 12 video ideas every single day, not week, every single day. And the weekly watch list video will be coming out as scheduled on Sunday. Hope to see you there. Wishing you all a green trading week.